Good morning, Paul Georgie from Allendale. It's April 13th, 2011. The outside markets giving us an excuse to have a rebound in commodities here this morning as the dollar is a little weaker. You've got crude oil up 54 as we speak. Gold is up $7 or so. Stock markets indexes are firmer here. So looks like grain markets could be a little higher. And it's a matter of risk on, risk off type action. Yesterday was the risk off. A lot of selling around the commodities, and just about every commodity was lower. Today, as we look across our screens, most of the commodities are higher here this morning. So we've got that flow of money back in with traders and funds willing to take risk positions. Some of the news that's out, we've got crude oil that punched through and made new lows from Tuesday overnight, and then bounced back and stronger here this morning. So getting some better feelings out of that market that could start the strength in some of these grain markets here today. The Libyan conflict seems like it's going to go on for a period of time, as the ceasefire did not happen and doesn't believe it will happen by both sides. Also, data coming out of MasterCard here yesterday that shows that we've seen gasoline consumption drop last week by about 1.8%, simply because of that 11-cent increase in price. So these are influences that we're going to be watching for the grain traders as well. Some of the news directly affecting corn, weather conditions and weather forecasts now are a little bit warmer for the weekend. Some of these extreme cold temperatures for the Midwest that was forecast for late this week. It looks like it's going to be a little warmer. We still do have moisture in the forecast that will slow down planting. However, talking to producers around the country late yesterday, they're going to be in the fields today, many of them planting and getting started with the spring field work in other areas. Another study that has been talked about in the trade and the comparison is the price relationships between 1996 and 2011-12 crop year. The tight stocks that we had in corn during the 96 period, and then the larger stocks that were seen in beans caused that spread to widen out, or I should say narrow in, where price of corn and soybeans became closer in price. Could happen here again this year, and if we're using the same price relationships, we could see the soybeans change as much or weaken as much as $2 further compared to the corn market. So something to monitor very closely as we go into first notice day here at the end of May. We'll be seeing some adjusting of positions. Watch that spread very closely. In South America, we're hearing today, actually out of China, that they canceled several cargoes of South American soybeans and negotiating to cancel several more. Seems that doesn't really make sense to us, as the price of the South American beans are much cheaper than U.S. beans. So if they're canceling South American, you got to expect that they may and probably are canceling some U.S. cargoes as well. So, and citing all of this because of poor crush margins in China. The wheat trade, focusing on the hard red winter wheat areas, that story continues and continues of the dry conditions that we've seen in the southern plains, and no real moisture through that area here in the foreseeable future. Over in the livestock trade, cash cattle at a standstill. Product is a little better here yesterday, up 32 in the choice, up 39 in the select. The futures came under a lot of pressure as the concern over consumer buying power because of the increased gasoline prices that we've seen this last week is going to take away some demand from beef at the retail counter. And the pork and hog prices yesterday in futures used the same reason to come under pressure there because of the gasoline prices taking away some of that consumer's spendable income. The hog market today, we've got cash markets a little firmer. Cutout values were up $1.44 yesterday, so seeing some improvement there. But we've got some packers that need hogs here the rest of this week, and they're going to be a little bit aggressive to get those numbers. As producers go to the field, we will see some and could see some firmer hog prices here in the next few days. If you got any questions, don't hesitate to give us a call. We'd be happy to answer any questions you might have. Reach us at 800-262-7538. And we wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.